Hello students, welcome to the next lecture of the accounting entries now. Question 1 already done in the previous lectures. Question 2 you people tried on your own. Now question 3 onwards, question 1 and 2 we practiced everything. The entries in the books of transferer company also, then the entries in the books of transferee company also, balance sheet also, even transferee company's ledger accounts. So initial 2 questions we practiced everything so that you get an idea how to do the accounting in the books of transferer company as well as transferee company. Now question 3 onwards, we will be doing only that much portion what is asked in the question. However, it is a piece of advice to all of you and you must follow that. Any question from question 3 onwards, if in the question transferer company's entries are asked, and I am doing that in the lecture, you try on your own transferee company's entries and balance sheet also. Okay, for your practice, you must try transferee company's entries and balance sheet also, and vice versa. If in any question it is asked transferee companies and balance sheet and I am doing that over here, then on your own you must practice transferer companies entries and ledger accounts. If not both the companies, at least one of the transferer companies and ledger accounts you must practice, at least one. Better if you do both the companies. So in the lecture, of course, we'll be doing what is asked. In your exams also, everything is not going to be asked. Either they'll ask you transferer companies entry or transferee companies entries and balance sheet or ledger accounts. Any one of the parts only will be asked. So whatever is asked in the question we will do, but for practice you must solve the other part of the question on your own. And of course you can bring those doubts to me in the live session. We will clarify that. Okay. So let's take up with question 3. The following are the assets and liabilities of O Limited and P Limited as on 31st March 2019. Equity share capital of rupees 10 per share fully paid up 40 lakhs. So 40 lakhs divided by 10, there would be 4 lakh equity shares of O Limited, and same way 20 lakhs divided by 10. So there would be 2 lakhs equity shares of P Limited. General reserve, profit and loss. Profit and loss is positive figure, means it's a credit balance. 12% debentures and sundry creditors, these two are external liabilities. And in assets we have goodwill, land and building, machinery, investment, stock, debtors and cash at bank. Cash at bank means bank balance. The two companies agreed to amalgamate and form a new company called OP Limited. So the new company OP Limited, all of you mark it as transferee company, and old companies O Limited and P Limited are transferer companies, which takes over, underline all, takes over all assets and liabilities of both the companies on 1st April 2019. The terms of amalgamation were as follows. The consideration is agreed at 55 lakhs and 21 lakhs for O Limited and P Limited respectively. So 55 lakhs is the purchase consideration of O Limited, 21 lakhs is the purchase consideration of P Limited, and the entire amount being payable by OP Limited in the form of its fully paid equity shares of rupees 10 each. So an entire amount being payable by equity shares of 10 each. O Limited's 12% debentures are converted into identical number. What is identical number? O Limited's debentures 6 lakhs, face value 100. So 6 lakhs divided by 100, there are 60,000 debentures, 6,000 debentures. So identical number means they are converted into 6,000 debentures only. I repeat, identical number means same number. Presently 6 lakhs divided by 100, there are 6,000 debentures, but they are earning 12% interest. In the new company also they'll get 6,000 debentures only, but earning 14% debentures and at same value 6 lakhs. Presently also book value is 6 lakhs. New company also will give them debentures of 6 lakhs only. Same quantity of debentures 6,000. However, the rate of interest will be increased to 14% from 12%. Liquidation expenses of O Limited and P Limited amounted to rupees 15,000 and 10,000 respectively, and underline were paid by OP Limited. Since OP Limited transferee company is paying it, the entry will come only in the books of transferee company. OP Limited to have an authorized capital of rupees 80 lakhs divided into 8 lakh equity shares of rupees 10 each. This will simply come in balance sheet. That's it. No other relevance. Okay, only in balance sheet. Otherwise, no other relevance in the journal entries. Authorized capital we simply have to write in the balance sheet of the new company, otherwise no other relevance in the journal entries. OP Limited made a public issue of 10,000 equity shares of rupees 10 each at par, which was duly subscribed. So this is the fourth entry we discussed in the order of journal entries. Issue of shares to the public entry will also come in the books of OP Limited. Now pass necessary journal entries in the books of OP Limited, means transferee companies entries are only asked, and also prepare the opening balance sheet of OP Limited. So as I said, transferee companies entries and balance sheet is asked. That is what we will do in the lecture. But a piece of advice, suggestion, and strictly follow that. All of you must try on your own the entries of O Limited and the ledger accounts of O Limited, entries of P Limited and the ledger accounts of P Limited. Do try that, then only you'll get confidence in this chapter. Now, if you all remember, then I told you in the past lectures that when we read the question, we have to first identify three things. First, we have to identify is it merger or purchase. Second, we have to identify the method of purchase consideration. And third, based on the merger or purchase, we have to identify in the books of transferee company, do we have to follow pooling of interest method or purchase method of accounting. Okay. If still any confusion, note down somewhere in the notebook. Every question, three things we have to identify. Okay. Three things we have to identify in every question. Yes, so note down at the top of your notebook or in the summary somewhere, every question we have to identify three things in the beginning. First, is it merger or purchase? Okay, every question do that first. Second, method of purchase consideration. Is it lump sum method, or is it net payment method, or is it net asset method? And third, based on merger or purchase, the accounting method, will it be pooling of interest method or purchase method of accounting? Of course, if it is merger, then it will be pooling of interest method, and if it is purchase, then it will be purchase method of accounting. Every question, first identify these three things, then only start with the solution. So let us first identify is it merger or purchase. Now recollect everyone, what are the three conditions of merger? Come on, yes. First, all the assets and liabilities must be taken over. Let's verify. See in this paragraph, I made you underline, OP Limited will take over all assets and liabilities of both the companies. So first condition of merger gets satisfied. What was the second condition? At book values. Now tell me, in this 1, 2, 3, 4, 5 adjustments, are you given any different agreed value of goodwill, land and building, plant and machinery, investment, stock or debtors? Are you given with any value? No. Are you given with any different agreed value of debentures and creditors? No. Debentures value is given in adjustment 2, but that is also given book value only 6 lakhs. You all can see that. Debentures value is given, but its agreed value is not different than book value. It is 6 lakhs only. So second condition is also satisfied. All assets and liabilities are taken over, and that too at book values. And third and last condition, the entire purchase consideration should be payable in the form of equity shares only, except fractional amount may be paid in cash. This was the third condition. See adjustment 1. What did I make you underline? Entire amount being payable by equity shares of rupees 10 each. So all the three conditions of merger are satisfied. Is it merger or purchase? It is merger. Every question, these three things you have to find. Okay, it is merger and it is not a purchase. Now purchase consideration method. Which are the three methods of purchase consideration? Lump sum method, net payment method, and net asset method. Adjustment 1. The consideration is agreed at 55 lakhs and 21 lakhs for O Limited and P Limited. This indicates it is which method? Lump sum method. Okay, which method of purchase consideration is it? Lump sum method. So we don't have to make any workings. The purchase consideration is already given. And third, which entry accounting method we will follow in the books of transferee company? Because it is merger, we will follow pooling of interest methods 7 entries and not purchase method. So every question, everyone, keep it in mind. In the beginning, very first you have to identify three things. Okay, first, is it merger or purchase? Second, method of purchase consideration, and third, based on the method of purchase, based on the merger or purchase, which accounting method will be followed? Pooling of interest or purchase method of accounting in the books of transferee company. Now, as asked in the question, so we proceed with the entries in the books of transferee company. All of you can pause the video and make the formats. Okay, give the heading journal entries in the books of OP Limited. Pause the video and make the formats. Then we shall proceed with the journal entries in the books of transferee company. Do it fast, everyone. I hope everyone has done it. So, first entry. What is the first entry in the books of transferee company? Business comes in, debit what comes in. So, business purchase account debit, and amount is payable to the liquidator, credit the payable to liquidator of transferor company's account. Here there are two companies, so to liquidator of first transferor company O Limited account, and then again to liquidator of second transferor company P Limited account. Now, with the amount of purchase consideration which is directly given in adjustment 1, 55 lakhs for O Limited, 21 lakhs for P Limited. So 55 lakhs for O Limited, 21 lakhs for P Limited, 76 lakhs total purchase consideration. Okay, business purchase account debit with 76 lakhs. Being business of O Limited and P Limited purchased. Okay, so first entry is done. Now second is a very important entry. Do you all remember what was the entry? Assets account debit at book values including fictitious assets. To liabilities account at book value including reserves. To business purchase account with the amount of purchase consideration. And then we had written as a note, we will find difference between share capital and purchase consideration. So if there is a loss on acquisition, we will debit it to P&L account. If there is a profit on acquisition, we'll credit it to P&L account. All of you can refer to those entries again. See here in the summary we had done. Entry number 2. Assets account debit at book value, including other non-current assets, and other current assets means fictitious assets. To liabilities account at book value, including reserves. To business purchase account with purchase consideration. We have to find difference between purchase consideration and share capital of transferor companies, and that difference will be transferred to P&L account. Means if it is loss on acquisition, you will debit to P&L account, and if it is profit on acquisition, you will credit to P&L account. So let's do the same thing. First we make the workings. We have done it in earlier questions also. So working note 1. All of you write down working note 1. Okay, in question 1 also we have done that earlier. First, share capital of O Limited. See in the beginning, what is the share capital of O Limited? 40 lakhs. P Limited, 20 lakhs. So share capital of O Limited, 40 lakhs. Share capital of P Limited, 20 lakhs. Total 60 lakhs. Total share capital. Now against that we have to compare it with purchase consideration. Against 60 lakhs, what is the total purchase consideration we are paying? 76 lakhs. From first journal entry you can see that total amount 55 lakhs plus 20 lakhs, 21 lakhs. What are we paying? Business purchase account debit with 76 lakhs. So 76 lakhs. Now are we paying more or less? Against share capital of 60 lakhs we are paying 76 lakhs, means we are paying more. How much more? 16 lakhs more we are paying. That is loss on acquisition. And basically if you follow this order of calculation, which is share capital minus purchase consideration, then simple logic, 60 minus 76 minus 16 lakhs is loss, and positive amount would be profit. Okay, if you follow this order. Now loss of acquisition. If you all remember, I told you earlier also that same company cannot show reserves, that is accumulated profits, as well as losses in the same balance sheet. I repeat, we have done this in past lecture also. Same company cannot show in its balance sheet reserves, that is accumulated profits also, and accumulated loss also, or loss also. So we have to write off that loss from the reserves, and then favorable balance of reserve will only be credited to P&L account in second entry, or if loss is more, then excess amount will only be debited to P&L account. So from all these reserves, general reserve and profit and loss account, first we will write off this loss. Okay, so this loss is to be written off from reserves, and then only we will debit or credit P&L account. So what is the total balance of all the reserves? Okay, what is the total balance of all the reserves? 6,50,000 plus 4 lakhs plus 5 lakhs plus 3 lakhs. Write down 6,50,000 plus 4 lakhs plus 5 lakhs plus 3 lakhs. 3, 7, 12, 18 lakh 50,000. Okay, 6 lakh 50,000 plus 4 lakhs plus 5 lakhs plus 3 lakhs. So that is 18 lakh 50,000. From this, we will write off the loss on acquisition, that is 16 lakhs. So how much favorable balance of reserves still remains? 2 lakh 50,000. This amount only we will credit to profit and loss account in the second entry. That's it. No other reserves will be included because all these reserves are combined against that loss is written off. So only this amount will be credited to P&L account in second entry. That's it. So now let us pass the second entry. Assets account debit. So which all assets account debit? Goodwill account debit with 8 lakhs. Then land and building account debit with 12 lakh plus 10 lakhs, 22 lakhs. Land and building account debit with 12 lakhs of O Limited plus 10 lakhs of P Limited, 22 lakhs. Then plant and machinery account debit 20 lakhs plus 9 lakhs, 29 lakhs. Plant and machinery account debit 20 lakhs plus 9 lakhs, 29 lakhs. Investments account debit only 10 lakhs of O Limited. Investments account debit 10 lakhs. Then stock account debit 4 lakh 50,000 plus 6 lakhs, 10 lakh 50,000. Stock account debit 4 lakh 50,000 plus 6 lakhs, 10 lakh 50,000. Then debtors account debit 3 lakhs plus 3 lakh 50,000, 6 lakh 50,000. Okay, debtors account debit 3 lakhs plus 3 lakh 50,000, 6 lakh 50,000. Cash at bank means bank account debit 2 lakh 50,000 plus 1 lakh 50,000, 4 lakhs. Bank account debit 2 lakh 50,000 plus 1 lakh 50,000, that is 4 lakhs. So assets account debit is all done. Now to profit and loss account, liabilities including reserves. So to profit and loss account from working note 1, as we have calculated that profit and loss account will credit with 2 lakh 50,000. Okay, so to profit and loss account 2 lakh 50,000. So as I said, liabilities including reserves, but we don't write general reserve and P&L account. Why? Because general reserve and P&L account is used in writing of this loss on acquisition, and then finally after writing of loss on acquisition, only this much balance remains in P&L account. So that only reserve P&L account of 2,50,000 we credit. Then to liabilities account. So in that we have 12% debentures, 6 lakhs only O Limited's value, to 12% debentures, 6 lakhs. Then we have which other liability is there? To creditors account, we have 2,50,000 plus 3 lakhs, 5,50,000. To creditors account, 2,50,000 plus 3 lakhs, 5,50,000. Okay, so assets account debit is done, to liabilities account is done. Now to business purchase account. Okay, to business purchase account with the purchase consideration of 76 lakhs. Business purchase account what we debited in first entry, same account we will close and credit in second entry, 76 lakhs. And I told you must verify the debit amount must be equal to credit. So 8 plus 22 30 plus 29 59 plus 10 69 plus 10 79 plus 6 85 plus 489 plus 190. Debit amount is 90 lakhs. And what is the credit amount? 2,50,000 plus 6, 8,50,000 plus 550, 14 lakhs plus 76, 90 lakhs. So you all can verify debit is equal to credit. Okay. So after this second entry, just verify that because it's a huge entry, big entry. So you just verify debit is coming equal to credit or not. So once again, all assets account debit at book values, including other non-current assets which we don't have here. To liabilities account including reserves, so the P&L account as per working note 1, 2,50,000 and other liabilities at book value, and to business purchase account. Okay, assets account debit, to liabilities, to business purchase. Being assets and liabilities of O Limited and P Limited taken over. Okay, being assets and liabilities of O Limited and P Limited taken over. Now, third entry. So, assets and liabilities are required. Now, settlement of purchase consideration. So, first of all, liquidator are the receiver, debit the receiver. So, liquidators account debit with 55 lakhs and 21 lakhs. So, liquidator of O Limited account debit with 55 lakhs. Okay, same amounts and account what we had in the first journal entry. Liquidator of P Limited account debit with 21 lakhs to. Now, what are we going to give? Because it is merger and it is given in adjustment 1, entire amount being payable by equity shares of rupees 10 each. So this entire 76 lakhs is settled in the form of equity shares only. So to equity share capital account. Okay, to equity share capital account 76 lakhs being purchase consideration settled. Being purchase consideration settled. Now fourth entry. Now if you all again remember, we discussed that first three entries will be there in all the questions. Entries 4 to 7 we have to pass only if specific information is given in the question. In that fourth entry was issue of shares in the public. Fifth adjustment we have that OP Limited made a public issue of 10,000 equity shares of 10 each at par, which was duly subscribed. For that, two entries will come. One, bank account debit. Bank is the receiver, debit the receiver, bank account debit. Two, equity share application and allotment account. Okay, bank account debit to equity share application and allotment account. 10,000 equity shares are issued in public of rupees 10 each. So duly subscribed means 10,000 into 10. What is the amount we are going to receive? 1 lakh. Being application money received. And then second entry for issue of shares, equity share application and allotment account debit with same 1 lakh rupees to equity share capital account. One lakh. Okay, being shares allotted. When we allot the shares, then we pass this entry. Right? So issue of shares to public is also done. Two entries will be passed for that. Now, after issue of shares to the public, we had liquidation expenses entries. Okay, just to help you out, you all can see this. After issue of shares to the public for liquidation expenses of transferee company, transferor company paid by transferee company, reserves or P&L account debit to cash and bank. Here, what are the liquidation expenses? Third adjustment. 15,000 of O Limited plus 10,000 of P Limited, total 25,000 are paid by OP Limited. So what entry we will pass, since we have P&L account credit in the second entry, same profit and loss account we will debit. Okay, profit and loss account debit as liquidation expenses and expense, debit all expenses and losses. 15,000 plus 10,000, 25,000. Okay, you all can see once again here, 15,000 of O Limited, 10,000 of P Limited. What are the total liquidation expenses? 25,000. Bank is the giver, credit the giver to bank account 25,000. Being liquidation expenses of transferor companies paid by transferee company, or here you can say OP Limited. Okay. Now after liquidation expenses, we had the entry of establishment expenses, preliminary expenses, registration expenses, sixth entry, but that we don't have in the question. There are no such expenses given. We directly have settlement of liabilities, which was given liabilities to cash and bank, but I told you that normally in liabilities we'll have the entry of debenture to debenture. Like here also we have in adjustment number 2, 12% debentures are converted into, we discussed, identical number means same 6,000 debentures of OP Limited's 14% debentures of rupees 6 lakhs. So this debentures to debentures means this 12% debentures liability we will have to close because that is settled. So 12% debentures account which we credited in entry number 2, we will close and debit it with full amount of 6 lakh rupees. So that old liability of 12% debentures account gets closed, and against that we are issuing to 14% debentures to 14% debentures account of same value 6 lakhs, being 14% debentures issued against 12% debentures. Being 14% debentures issued against 12% debentures. This was the last entry. Okay, after that we have no other entries. Now total of journal. So 76 lakhs plus this we saw 90 lakhs it was. So 76 plus 90, 1 crore 66. 1 crore 66 plus again 76 lakhs. So 2 crore 42. 2 crore 42 lakhs plus 1 lakh 43, 44. Plus 10, 2 crore 50 lakh 25,000. You all can do it in the calculator. 2 crore 50 lakh 25,000. Okay, this is the total. Now, what else is asked in the question? You all can see that it is asked, pass necessary journal entries in the books of OP Limited done, and also prepare the opening balance sheet of OP Limited. Now what you have to do, as we did in the last question, make 1 page blank format. I repeat, make 1 page blank format of balance sheet. Below that, after that, we will make notes to the balance sheet, and then we just have to do fill in the blanks. Copy and paste the note items in the balance sheet. Okay, as we used to do in second year BCom and we did in last question also. So make 1 page blank format of the balance sheet. First we will make the notes, and then from the notes we will directly copy down the things in the balance sheet. So all of you pause the video and make the format of 1 page of balance sheet first, and then you continue this. Okay, all of you pause the video and make the format of balance sheet of 1 page blank, and then you play the video. First note is of share capital. Okay, first note is of share capital. Now in that first we will write authorized capital. So all of you can see authorized capital is given in adjustment number 4. I told you OP Limited to have an authorized capital of rupees 80 lakhs divided into 8 lakh equity shares of 10 each. And I told you here we have to write it in balance sheet only, no other relevance. So here we have to write the authorized capital in the note 1. 8 lakh equity shares of rupees 10 each, 80 lakhs, and double underline. I repeat, double underline. What is the relevance of double underline? Do you all remember? It is not to be included in the total. 80 lakhs, we double underline it, means it is not to be included in the total of balance sheet. It is just for information purpose. Then after authorized capital, we will have issued, subscribed, and paid up capital. Okay, issued, subscribed, and paid up capital. Now, from the journal entries, we'll get entire balance sheet is to be made from the journal entries. So if you all see it in the journal entries carefully, Entry number 3, 76 lakhs divided by 10. How many equity shares would have been issued? 7,60,000 equity shares would have been issued. Plus adjustment entry 5. How many equity shares did we issue in the public? It was given in adjustment 10,000 shares of 10 each are issued in the public. So this 10,000 plus this 7,60,000. What are the total number of equity shares available? 7,70,000. Okay, 10,000 plus 7,60,000. 7,70,000 equity shares of rupees 10 each. That is 77 lakhs. And here in bracket you will mention of above. Okay, disclosure, if you all remember, I told you in the last question. Now, how many shares are issued for consideration other than cash? These 10,000 shares which are issued in public, they are issued for cash. These 10,000 shares are issued for cash. But this 7,60,000 equity shares are issued for consideration other than cash, because this 76 lakhs what you are paying it to the liquidator. You are not getting money for that, you are getting business of O Limited and business of P Limited. So this 76 lakhs of shares, 7,60,000 shares are issued for consideration other than cash. So that disclosure we have to write. Of above 7,60,000 equity shares are issued to O Limited and P Limited for consideration other than cash. This disclosure is compulsory as per the Companies Act if there are bonus shares or shares issued for consideration other than cash. Okay, I repeat it again. From entry number 3, 7,60,000, 76 lakhs divided by 10, 7,60,000 equity shares are issued to O Limited and P Limited shareholders. From entry number 4 and 5, 10,000 shares of rupees 10 each. You can see in adjustment 5 also 10,000 equity shares are issued to public for cash. So 7,60,000 plus this 10,000, 7,70,000 equity shares of rupees 10 each is issued and subscribed capital. And out of that, the third entry is 7,60,000 equity shares which are issued to O Limited and P Limited are issued for consideration other than cash. Second note is of reserves and surplus. Okay, after share capital in shareholders funds, what is the second item? We have reserves and surplus. In that we have to write P&L accounts balance. Now profit and loss account, what we credit in entry number 2 is 2,50,000 minus what we debit in entry number 6 for liquidation expenses is 25,000. So what P&L account balance will come in reserves and surplus? 2,50,000 minus 25,000, 2,25,000. All of it are down. Reserves and surplus, profit and loss account, 2,50,000 that was credit in entry number 2 minus 25,000 that was debit in entry number 5. So 2,25,000. Total also 2,25,000. Now note 3. In non-current liabilities we have long-term debt or borrowings. So long-term borrowings. In that we have only debentures. Now again in case of debentures, entry number 2, 12% debentures account credit 6 lakhs and entry number 7, 12% debentures account debit 6 lakhs gets closed. Now in the new company we have given them which debentures? 14% debentures. So what will come in the new company's balance sheet in long term borrowings? 14% debentures of rupees 6 lakhs. Total also 6 lakhs. Then after non-current liabilities, in current liabilities we have short-term borrowings, but in this question we have no short-term borrowings. That is bank overdraft sort of thing is not there. After short-term borrowings, trade payables, that we have creditors over here. So trade payables, note number 4, in that creditors. All of you can see in the journal entry, creditors are what amount? Second entry, 5,50,000. Okay, to creditors 5,50,000. So straight away, creditors 5,50,000. Bills payable are not there. Total also 5,50,000. Okay. So liabilities are practically all covered. Now, other than creditors, trade payables, we have short-term provisions in the balance sheet liabilities side in the current liabilities, which we don't have in this question. Then after short-term provisions, other current liabilities are also not there in this question. Now we come to assets. In that non-current assets, in that fixed assets, in that tangible fixed assets. Okay, tangible fixed assets. Now, which all tangible fixed assets do we have in journal entry 2? Very first, goodwill is intangible fixed asset. Okay, land and building of 22 lakhs. Write down land and building 22 lakhs. Plant and machinery 29 lakhs. Okay, plant and machinery 29 lakhs. Then what do we have? Investments. Okay, investments will come in the next heading, non-current investments. There was a separate heading in the balance sheet. So investments we cannot include. Only these two items are there in tangible fixed assets. Other items are not there. So in tangible fixed assets, 22 lakhs plus 29 lakhs, we have 51 lakhs. Then sixth is intangible fixed assets. Okay, intangible fixed assets. In intangible fixed assets, we have only one item, that is goodwill. So only goodwill will come in intangible fixed assets, and you all can see how much is goodwill in entry number 2. First item, 8 lakhs. So all of you write down goodwill, 8 lakhs. Then after intangible fixed assets, next item in non-current assets is non-current investments. Okay, next item what will come in non-current assets is non-current investments. How much are non-current investments or investments in this entry number 2? All of you can see that investments are rupees 10 lakhs. So write down investments 10 lakhs. Total also 10 lakhs. Then after non-current investments, other non-current assets and long-term loans and advances we don't have. Now we come to current assets. In that current investments we don't have. Directly inventories. Okay, directly inventories. In that stock So all of you can see in entry number 2 there is stock of what amount? 10,50,000. So stock 10,50,000. Okay, only one item in inventories. Then after inventories we have trade receivables. Okay, ninth notice, trade receivables. Now what does trade receivables include? Debtors and bills receivable. So in this entry number 2, debtors all of you can see are 6,50,000. So debtors 6,50,000. Bills receivable are not there. Then after trade receivables, cash and cash equivalents. Okay, cash and cash equivalents. In that we have cash at bank. Now here if you all remember, I told you whatever is bank balance debit you'll add and credit you will minus. So if you all see it carefully in entries, then entry number 2, bank account is debited with rupees 4 lakhs, that we will plus. Entry number 4 also, bank account is debited with 1 lakh, which we will plus. And then entry number 6, bank account is credited with rupees 25,000, which we will minus. Okay, no other place bank is there. So 4 lakhs from second entry plus 1 lakh from fourth entry minus 25,000 from sixth entry. So how much cash in bank account? 4 lakhs from second entry plus 1 lakh from fifth entry minus 25,000 from sixth entry. So 4 plus 1, 5 minus 25, 4,75,000 of bank balance. Okay, debit amount of second entry and fourth entry you will add, and credit amount of sixth entry you will minus. So this is how we have to get all the notes. Now what you have to do, in the middle page where you have left the balance sheet format, in that you'll do fill in the blanks. You'll put all these items. See, I have a ready balance sheet with me, so you can pause the video and note down these items of balance sheet. Okay, pause the video and check it from the notes and note it down. Share capital, see in note 1, do we have 77 lakhs or not? So share capital 77 lakhs. Pause the video and write it, okay, wherever required. Reserves and surplus, see in the note 2, all of you, do we have 2,25,000 or not? So write down in the balance sheet, reserves and surplus 2,25,000, total shareholders funds 79,25,000. Here after liabilities give the heading shareholders funds. Okay, after liabilities you have to give the heading shareholders funds. You all give this in the notebooks. Then second we have non-current liabilities. In that we have long-term borrowings as per note 3. All of you can see the long-term borrowings is 6 lakh rupees. Okay, debentures. So directly long-term borrowings 6 lakhs. Then in current liabilities we don't have short-term borrowings. Directly trade payable as per note 5,50,000. Look at trade payables as per note 4. Do we find 5,50,000 or not? Yes. Then short-term provisions and other current liabilities are not there. Total 5,50,000. 79,25,000 plus 6 lakhs plus 5,50,000, 90 lakh 75,000. Now asset side, non-current assets, in that fixed assets, in that tangible fixed assets as per note 5. Okay, tangible fixed assets are as per note 5. You all can see that in the note 5, tangible fixed assets are 51 lakhs. Okay, tangible fixed assets. Intangible fixed assets in note 6, you all can see goodwill of 8 lakhs is there. Okay, then non-current investments as per note 7 we have 10 lakhs. Now after non-current asset investments, if you want, you can write the items of long-term loans and advances and other non-current assets also, but they'll be nil. Total 69 lakhs. Now in current assets, first item is current investments that we don't have. Even if you write it, you'll write it as nil. Now inventories we have as per note 8, you all can see that inventories as per note 8 is 10,50,000. Okay, inventories as per note 8, 10,50,000. Then after inventories, trade receivables as per note 9, 6,50,000. See that? Trade receivables as per note 9, 6,50,000. And then cash and cash equivalents as per note 10, 4,75,000. Cash and cash equivalents as per note 10, 4,75,000. We don't have short-term loans and advances and other current assets. Total 21,75,000. 69 lakhs plus 21,75,000 is also 90,75,000. Okay, so this your balance sheet should get tallied. What you all can do, directly you can make this balance sheet from the notes, or else pause the video and all of you make this balance sheet on your own. Okay, here it is. So pause the video and then make the balance sheet on your own. Right? So as I said to you in the beginning itself, in this question, what we have done, accounting entries in the books of TRANSFEREE Company OP Limited and its balance sheet. Advisably, strictly, all of you must now try on your own the entries in the books of O Limited and 4 ledger accounts: realization account, equity shareholders account, TRANSFEREE Company OP Limited account, and equity shares of OP Limited account, and same in the books of P Limited also. All the journal entries and realization, equity shareholders, OP Limited, and equity shares of OP Limited. This you must try on your own for this particular question. So that'll be all for today. Take care. Bye everyone. See you all in the next lecture. Bye.